South Korea has raised its fuel price cap by more than 200 Korean won per liter, with pump prices expected to climb into the 2,000 won range. And at the same time, the government is moving to restrict naphtha exports for 5 months as Middle East tensions disrupt energy supplies and raise concerns over shortages. Our Seung-jae has more.
South Korea's second fuel price cap took effect at midnight on Friday, raising limits by more than 200 won, or 15 cents per liter in just 2 weeks, as global oil prices continue to climb. Under the new cap, gasoline is set at 1,934 won, or about $1.43 per liter, while diesel is capped at 1,923 won, roughly $1.42. Kerosene is priced at 1,531, or around $1.13 per liter. Even with the measure, retail fuel prices are expected to enter the 2,001 range, or about $1.48 per liter, as pump prices had already been trending higher. Consumers say the burden is growing, with monthly fuel costs rising significantly.
I used to spend about 200,000 to 250,000 a month on gas, but now it's gone up to over 300,000 won, so it definitely feels like a much heavier burden.
The government says the adjustment reflects rising global oil prices while expanding tax relief to ease the impact. Fuel tax cuts have been widened to 15% for gasoline from the previous 7% and 25% for diesel from the previous 10%, lowering prices by up to 6 cents per liter, with a larger reduction for diesel due to its role in industry and logistics. Finance Minister Koo Yoon-chul says the goal is to balance market pressures with consumer relief. The new cap will remain in place through April 9th, with officials warning prices could continue to rise in the coming days. Authorities also say additional tax cuts remain possible if global oil prices climb further. Meanwhile, South Korea is moving to stabilize supply. The government will begin restricting the export of naphtha, used for manufacturing plastics and chemicals, for 5 months starting Friday, as shortages deepen amid the Middle East conflict. The Ministry of Trade, Industry and Resources say the move follows supply disruptions after strikes on Iran, with South Korea importing about half of its naphtha through the Strait of Hormuz, a key route now effectively closed. To support domestic industries, authorities plan to expand low-interest loans and may raise import credit limits. About 11% of domestically produced naphtha exports will be redirected to local buyers. Officials say the measures are aimed at containing both rising consumer costs and growing supply risks as global energy uncertainty continues. Seung-jae, ArirangNews.